federal prosecutors have opened a criminal investigation involving Federal Reserve Chair Jerome Powell, sending shockwaves through financial markets and raising serious questions about the independence of the U.S. central bank. The probe reportedly centers on renovation work at the Federal Reserve's Washington headquarters, including whether Congress was misled about the scope, cost, or approval process of the project. Investigators are said to be reviewing testimony, internal communications, and financial records. No formal charges have been announced, and the investigation remains ongoing. Powell has pushed back strongly, calling the inquiry an unprecedented challenge to Federal Reserve independence and warning that political pressure on monetary authorities could undermine financial stability. So far, the Federal Reserve has issued no detailed public response beyond acknowledging awareness of the investigation. Market reaction. Futures slide, volatility spikes. Markets reacted immediately to the news. U.S. stock futures fell sharply, reflecting investor anxiety over institutional credibility and policy uncertainty. Traders moved into a risk-off posture as the prospect of legal scrutiny at the top of the Federal Reserve introduced a layer of uncertainty rarely seen in modern markets. Analysts say the sell-off is less about legal outcomes and more about signal risk. The Federal Reserve sits at the center of global financial stability, guiding interest rates, liquidity, and inflation expectations. Any threat, real or perceived, to its leadership or independence is difficult for markets to price. Treasury yields fluctuated, the U.S. dollar softened, and volatility indicators moved higher as investors reassessed exposure across asset classes. Why this matters? This is not just a legal story, it is a systemic one. The credibility and independence of the Federal Reserve underpin confidence in U.S. markets and the global financial system. Even without charges, the existence of a criminal probe involving the Fed chair is enough to unsettle investors. Bottom line, markets are reacting to uncertainty, not verdicts. Until clarity emerges, volatility is likely to remain elevated. Any escalation or official response could have outsized implications for equities, bonds, currencies, and monetary policy expectations. This is a developing story. Further updates expected.